Broadcast, 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 broadcast. Want to welcome everyone to Global FX Radio YouTube Sunday night week ahead show. I'm your host, Andrew Spanton, Sunday, October the 5th, 2008. Oh my goodness, what a night already. Time is 5:54 p.m. Eastern, and we already have such major action. The euro gapping down 170 pips, and now bouncing over 100, allowing us to get short and cleaning up right now in premium. So right now, the reason why the euro is going down so much, again, is the Germans and the French and the European officials got together and they're bailing out banks. They're going to provide some liquidity. Germany on Saturday did not want to do anything. Germany basically said no. And then, as more pressure came to fruition, as more pressure was put on them, sure enough, they gave in. Well, they didn't really give in my opinion. They gave in for the individual accounts, bumped it up to 90,000 euros per account, and individuals only. If I recall, our lawmakers are in a panic because of payrolls, because banks and accounts are going to be frozen. So if the EU officials are only going to save the individuals, what is that going to do for the payrolls? What is it going to do for getting your paycheck? So things in Europe are looking horrendous. And take a look at that. Take a look at my webinar on my YouTube, youtube.com/voiceofforex. Take a look at that YouTube. You can do a search under Spanton and get to my channel, Voice of Forex, and subscribe. When you subscribe, you get an email whenever I do a video. And, I'm not that most consistent because I do this for free. For free? I do it for free. Would you look at this euro-yen? Folks, we're up over 100 pips in euro-yen. Take one off here. Well, we're up 90 pips. Take one off. We'll take that trade any day. What a bounce we just got. You got to love it. My newsletter, I outline everything that went on today. I outline everything that happened today and why it's going to continue to happen. There's a panic going on in Europe right now. There's a panic for Americans and foreigners to get their money out. They've all benefited from a very strong euro over the last 5-6 years, and now they want to get their money out because they're panicking. They want to get their money safe to home. And by doing this, they're causing dramatic need for dollars. Everybody wants their money back. Billionaires who had money abroad, who have diversified, want their money home. They're nervous. So that's on top of all the other things going on, with sovereign wealth funds buying U.S. assets, with the government bailout. There's so many factors going on here, it's incredible. And there's a massive need for dollars. This bailout package is not, the first 100 million is not going out for 4 weeks, according to the Treasury. Europe is refusing to bail out these American-made products that put them into this problem. That's part of the problem also, and I agree with the Europeans. They should have to. If the U.S. is going to guarantee, and again, I'm an American, but I still think that, shoot, if Merrill Lynch sold Europeans $1 billion worth of these things, and they're going to take such a massive hit on this because BNP Paribas underwrote it with them and sold it to their people, they should get it. And Americans going to bail out Merrill Lynch, which Bank of America owns. Well, shouldn't the other ones get guaranteed too? Now, the thought is, I guess, is that once the Americans do put a floor on prices, that everyone else will mark-to-market things, but there's no general accounting principles amongst nations. It's only nation by nation. Everyone has their own generally accepted accounting practices, GAAP, and the Europeans are different. So, there's lots of problems, and Sarkozy's not getting anything done. The Germans finally agreed to it today on Sunday. So as we look at the time ahead, folks, it's not going to be about the macroeconomic numbers, though I do think Australia's going to cut rates, and I think that it's a sell on the news event this week with Australia. I think you buy the Australian across the board after they cut rates. I think cable's going to play catch-up and pierce through 75. We'll get to that in a second. But I think it's not going to be the macroeconomics. It's more the credit squeeze. It's more the global meltdown. It's more a panic to get your money home. And Americans are the most diverse nations out there with the most savvy investors. And hedge funds now have so many redemptions, and they're even more savvy. They're panicking and bringing their money home too. And that's why we're seeing commodity prices collapse as well. So an unwinding of the theme over the last 4 years is happening, and the carry trade is one of them. Euro dollar on the hourly chart looks horrible. Again, as we look at this 30-day chart in the hourly, it looks like death. And again, take a look at my YouTube broadcast. We did the daily, and it shows you that on this euro dollar, when you take a look at this chart, we are busted of a major uptrend channel line that started back with the euro at almost 85. We are at such a major channel line that's busted. BNP Paribas spoke about this line. Look at how it's busted. Bye-bye. I mean, this is momentum. People are trying to basically catch bottoms, and they're getting taken out and shot. Look at the Fibonacci on the euro dollar. A long-term retracement from the highs of 164 down to the lows, let's say even to here, the 2002 low. The 38% retracement, 38% retracement, 30.2, is 132 on the euro. If you do it from back to the real lows, we get 130.60, and that's where I get my 131 level. That's just the 38% retracement. The 50 is 121.50. So this is a major break. Now, do I think it's going to go down a straight line? Do I think this is going to keep happening? No. I think we're setting up for a beautiful turnaround Tuesday. I think Bernanke is going to swoop in like Superman and cut rates this week sometime. I think London's going to cut rates. I think there's going to be more of a flood of dollars. And I think we abate, but there's panic right now. And it's not until turnaround Tuesday that this is going to abate. Dollar yen gapping lower with the dollar basically strengthening. I can see dollar yen maybe having a little bit of a pop, but if they really sell this carry trade off again, we're going to probably retest 103.50. I think 104.50 is a given tonight that we retest. But again, with the dollar very strong, the futures are going to be very weak. Dollar yen's going to be weak. Remember, they both go down when they hit the carry trade, but again, the market's been very volatile. It's going to be even more volatile. This is just the beginning. Hopefully you took some sterling dollar trade that we sold at 177.10 before, just right near 176.20. We're up about 60, 70 pips. You might want to take one off the table and let the rest ride, people. I'm doing this in front of my premium room, so just letting you know. 3 minutes. All right. So sterling dollar on the daily. We crack through 75.50 and say bye-bye. Say hello to 174.50 fast. We might even go to 173 in a shot. Sterling dollar looks terrible. Any rallies. Euro sterling is busted. I don't know if I'd be selling cable here, but certainly when we had the bounce up to almost filling the gap at 177.10 with a stop of 177.60, seemed like a high-risk trade right there. Timing is everything, baby. Timing is everything. If you could have been killed in cable tonight, shorting it at 76.50. You ran up 60 pips. Euro sterling is busted. Euro sterling is gapping lower. Euro sterling, we want to be selling the bounces tonight. Should it rally through 77.90, 77.80, I would get worried. But really, Euro sterling, we need to take out 78.50 for me to really get nervous about this breakdown. This is momentum. I said this in my newsletter. I showed it 2 days ago in my newsletter. This is busted. It is done. Euro sterling is toast. Euro yen on the daily. Well, it's reversing right now because dollar yen's exploding. Because again, the dollar is having a nice rally, and dollar Swiss we bought nicely on that pullback. Dollar yen could definitely go higher. We have a short in at 105.50 with a stop of 106.20. So I wouldn't sell dollar yen here. Again, looking at this euro yen, to me, it's busted. Measure the move from 147 to 156, 900 pips from 147, and we go to 138. And again, over the 10-year period on euro yen, just look at the lows back in 2000, and look at where we could go. I mean, this thing has got major. I mean, this is going to be a meltdown. This bounce, in my prediction, November to December, we get a major move down. 140 is a massive spot. And I think 140, we're probably going to bottom out a little bit, turn around Tuesday in the next 24 to 48 hours. But I would say the year, we're going to end 130. But not until we get a sick bounce to 150 again. It's just not going to be that easy. October, November, the stock market maybe bottoms out and bottoms, and we get a big rally. And then Thanksgiving time, or maybe a week before, we start to really have that year-end move. So that's the way I would say it's going to pan out. And it's just going to go down every day at the end of the year. Sterling yen, another one that looks like it's going to be busted. We break through 185 in sterling yen and say bye-bye. And say hello to possibly even 180, 178.50. But this break is horrible. Andrew Spanton, Global FX Radio YouTube. The only voice you'll ever need in Forex that makes you money. Have a good night.